So good morning, everybody. I'm not quite sure where Michael is. He came in this morning and he was green screened. I don't know what that means. I'm kind of texting with him on the phone. We'll have to see where that goes. I'm not really sure. So there you go. And my air conditioning is out today. So just so that you know, I will be glowing. Isn't that what they used to say about the 40s film stars? They never perspired. They just glowed. So that will be happening a little bit today. So very exciting there. So we have a great show this morning. I am actually so excited about this show. I just can't even tell you. So we had some around here in my neck of the woods, we had kind of a homeowners insurance crisis that happened where several of us actually got canceled. Our insurance got homeowners insurance got canceled. And then a couple of us, our rates just went way screaming high. And then some other people had been talking about this kind of happening to them too. And I thought, okay, this sounds like it needs to be a podcast. So I went and talked to the insurance commissioner, Glen Mulready, and he said he would talk to us about that. And then I also found my insurance agent found me the most wonderful person ever. Her name is Kayla Blount, and I'm going to bring her on here in just a second. She is an independent insurance agent who runs her own agency here in Oklahoma. She has 3 different locations. And she's been in insurance quite some time. And so I contacted her and asked her if she'd like to do the podcast with us. She said, yes, she would. So she's going to be on, and I'm actually going to bring her on here while we're waiting for Michael. And I'm just going to pull on Kayla and say, good morning, Kayla. How are you?
Good morning.
It is so good to see you. And thank you so much for being on this morning.
Yes, ma'am. Doesn't everybody want to get up early in the morning and talk about insurance?
Yes, apparently people do, because we're populating quite a nice audience this morning. So yes, apparently people do. And I do think that, I mean, when you are in a situation where it's pay your mortgage or pay your homeowner's insurance, or you're on a fixed income, this is super, super important to some people, you know, for sure. So good morning, Amber Evans, who's already on this morning. You are bright and early up and awake. Anybody who's on this morning, please remember we have chats on Rumble. We have chats right here on X, on Facebook. Please stick your comments in there and your questions so that Kayla can answer those for you. So Kayla, what we're going to do this morning is I'm going to share my screen so that we can get on a video, because unfortunately Insurance Commissioner Mulready was not able to be on with us live this morning, which would have been nice, because to be perfectly honest, before we pull up this video, I know education and I know some other things, but I don't know insurance very well. So I wish I had been much better versed in that when I spoke with him. I think I might have been able to ask some more cogent questions. So please feel free. I think you're going to just kind of wait until the end of the video and then, you know, address anything that you've seen in there? Is that what we're going to do?
Yeah, let's see what Commissioner Mulready has to say, and then we'll jump in and make comments about things, and then he does, being the insurance commissioner, he does the 30,000-foot view so people get an idea, but then what we'll do is we'll dive into specifics to really hammer some things down.
That's perfect. Okay, so let me see how we can share this. Let me pull it up. I'm having a little bit of an issue with that. There we go. Okay, so here is the screen, but I just need to be able to share it. All right, here we go. All right, there is the screen. Here it is. There's the screen. We're all good to go now, but I have to get him started, and I can't do it from here. So let me do this. Okay, so I'm going to go ahead and start this, and we'll just go from there. Are we good?
Yes, ma'am.
Okay, here we go. Uh-oh, can we hear it? Appreciate you coming on, and I'll give you kind of the run up to what caused us to seek you out and to do this particular podcast. So I live in the country, and I know we won't go into all the problems people in the country have insuring their homes, but one of them is a lack of water supply in case of fire. And the company that several of the neighbors had, it was called Openly, canceled our insurance. And then when we went back to try to get other insurance, it was considerably higher than we were getting before, and we all got a little bit freaked out about it. So I thought, well, and then I called I have an independent agent who helps me, and I called and talked to her, and she told me that she was having a lot of trouble getting people into insurance because it's been so expensive. So a couple of people sent some questions into Michael, who's not going to be here with us for this one today, but I thought I'd just kind of go right into the questions, if that's okay with you.
Sure. Yep.
Okay. So one of the questions was, how are you protecting Oklahoma from becoming another Florida or Louisiana, where the insurance prices of property are so high that people are having trouble paying for that?
Yeah. So first, I guess I would want to establish almost a baseline to say that, what's happening in the property insurance world is not an Oklahoma issue. It is happening nationwide. Now, the issues are a little bit different. You're talking about wildfire risk. That's in California and Montana out that way. We here in the Midwest have convective storm.
You get her. She wants to be on the show.
Risks are going. I don't mean to, we're not naming people, but where the risks that insurance companies will not write, they have an opportunity, an insurer of last resort. State of Florida.
Okay, I'm going to stop that for a second because Amber just texted me and said that we didn't have any audio. So how long did we not have any audio? Oh gosh, now we have nothing. Are we there? Oh, wait. Okay. Sorry. I muted your mic and I muted my mic in case there was feedback with him. Did that mute him too?
I think that muted you. Yes.
Okay. All right. So how far back do I need to go? Do you know? Maybe like 3 minutes?
Maybe about 2 minutes. Yeah.
Okay, perfect. Then let me switch this back. I'm so sorry about that. I just thought if somebody comes in and starts yelling, it's going to go right over the top. So I totally forgot that was how you guys were hearing my audio. So thank you, Amber, for telling me that. And I will fix this right now. All right, we'll go back just a few minutes. Okay, and then here we go.
Insurance companies that are going to write coastal properties within certain mileage or whatever of shore, or certain really strong fire prone areas. That's your availability issue. How they respond to that is they've created high risk pools where we're pooling where the bad risks are going. I don't mean to, we're not naming people, but where the risks that insurance companies will not write, they have an opportunity, an insurer of last resort. State of Florida, Citizens Property Insurance Company is their largest insurance company in the state. It's owned by the state. Okay. It's not a private insurance company. It's where all their high risk pool goes, and it's their largest, largest insurer. We don't have that. Every dollar of premium that gets paid in Oklahoma is paid to a private insurance company, not to any kind of state plan, or like some states have done, Louisiana, South Carolina, they've done wind pools where they're maybe pulling the wind risk out and doing that. But again, that's state government stepping in and saying, we're with the government, we're here to help. We don't have that in Oklahoma. Ours is a private market. And so what we try to do, as far as not becoming another Florida and Louisiana, is allowing insurance companies, allowing the competitive free market to work. And that is allowing them to price their product properly for the risk. And, California stepped in and did something quite different. They said, look, we're not going to allow any homeowners rate increases over, I think it was 7%. Well, homeowners loved that for a couple of years. But then what happened is, one by one, every major insurance company said, we're no longer going to write insurance, homeowners insurance, in the state of California because of these artificial constraints that have put on, and there is no path to profitability. Well, that doesn't help anyone when you can't get coverage at all from an insurance company. So we allow the competitive free market to work. I'll also mention, Jenny, this legislation that we pushed through this year. It's called the Strengthen Oklahoma Homes Act. I totally modeled it after the state of Alabama, a program they've had in place for about maybe a little less than 10 years. But it was signed by the governor. And so we will begin having the ability as of November 1st, when the law goes into effect, to issue grants to Oklahomans who are replacing their roofs to fortify their homes. So there's a IBHS, Insurance Institute for Business and Home Safety. They're out of South Carolina. They have a program that has been very successful. But basically, Jenny, you're going to replace your roof. It's time to replace your roof.
And fortunately, you're about right.
Yeah, and for a lot of people, And so let's just say, for sake of example, a standard roof, it's going to cost you $20,000. But if you upgrade to Class 4 shingles and you do the underlayment and the drip edge and the vapor barrier according to IBHS standards, let's say that's going to cost another $10,000. We will issue a grant out to folks like you so that you can take it that next step up, so that roof then withstands substantial wind and hail in the future and lessens your chance for a loss. It gives you an immediate discount with your insurance company, typically anywhere from 25 to 40% on your wind and hail premium part of that. So that's something in a very practical basis that we have put in motion. Legislature pushed that through that we're pretty excited about.
And that's a state grant.
Yes.
So it's coming from taxpayer funds.
It's coming from leftover funds with the insurance department. No money is being appropriated. Yeah. The insurance department operates. We're not appropriated. We don't take a dime from the legislature in the budget process. I'm pointing because they're right up the street here. We don't take money from the legislature. We send up almost $400 million through the insurance department to the legislature and to our public safety pensions.
Awesome. Well, let me squeeze something in here just a second ago. There was an article by Steve Metzer from the Tulsa World. Oklahoma homeowners pay among the highest premium rates in the nation. I'll look at why. You were actually cited. They called you and talked to you about this article specifically. But here's the thing, I think, which is kind of tweaking people. According to a July 1 report by Industry Watcher Bankrate, the current national average cost of homeowners insurance is $2,230 per year for $300,000 worth of dwelling coverage. In Oklahoma, the cost is $4,700. And you go on, and then it said a rate comparison chart updated in July by the Oklahoma Insurance Department reflects annual premiums ranging from a little more than $2,400 to more than $5,000 that a homeowner might expect to pay for coverage on a $250,000 frame home in Tulsa. And that, like you said, average home insurance across the United States jumped by an average of 33% between 2020 and 2023 and continued to rise this year led by 63%, like we talked about in Louisiana. So obviously we are paying more as a state. Is there a way to get the premiums down? Because I understand what you're saying. You can't put a cap on it because then, insurance companies basically say, well, if I can't make any money here, I'm not going to come here. And I can understand that too. But there is a significant increase in dwelling insurance rates.
Yeah, on specific increases, I took a look at, took our top 12 companies here in Oklahoma, which, it's got to be close to 75% of the market share. And over the last 3 years, you have 5 of those companies where their annual rate increase has been between 7% and 9%. Okay. But then you also have 4 companies that are in those top 12 where their average increase has been 22 to 33%. So you have a range from 7% up to 33%.
That's quite a bit of range.
Annual, yes, right. Yeah. And so that's why, number one, I haven't said it yet, but our first piece of advice for anyone on their homeowners, how do I save money? Our advice is to shop around. We have 113 companies that have active homeowners policies in place here in Oklahoma. So we have a very competitive marketplace. And as you can see, those rate increases over the last 3 years have differed quite a bit. How much that happens. But let me go back to the article and your citing of other states. I would push back on that in that, what I just talked about, the high risk pools and insurers of last resort and wind pools that some states have, skews those numbers, right? If I'm Florida and I'm able to pull out a whole bunch of all my high risk business out of those premium calculations, that looks very different. Now, states, you're still paying for those in your taxes with that high risk pool. It's the largest insurer in Florida. Same with Louisiana. You're comparing, hate to use that phrase, apples and oranges, but it certainly skews the numbers. Again, because when you're looking at average premiums in Oklahoma, those are average premiums that everybody is paying. Those states that have those in place, you're not lumping in those pools into those average premiums. You're not seeing that. And those are the highest premiums in the state.
Okay, that does make some sense. So let me get to the second question. Why are companies allowed to take multiple increases in a year? And this is an insurance agent saying some of my clients are getting hit with 2 to 3 increases at renewal, doubling and sometimes tripling their insurance rates.
Yeah, so I don't know if there are companies giving multiple increases in a year to an existing policyholder. I'd like to know about that. Okay. Now they have filings with us, so they are doing multiple increases with us, but you have one renewal each year. You're not right. So they may have made 2 or 3 changes in the year, but the homeowner doesn't see those changes until renewal.
Okay.
And then I'd push back a little bit there, Jenny, too, to say that I guess, well, what I just told you, in 3 years, we have had one company, what would that be? 99% increase. So that premium has doubled, but that's one of the companies out of our top 12. Others, you're ranging from 21%, up to that, 100% basically. So over a 3-year period, we're not seeing that with every company. There's an outlier, yes, of a company that the premiums doubled in a year. But the other factor that goes into that I think a lot of people may not And it's a really big factor, and that is inflation.
Okay, yeah.
The impact of inflation.
Gosh, none of us are suffering anything with inflation right now, are we?
Right. And so when that 2x4, to oversimplify it, increases 40%, and I'll give you a personal example. I replaced my roof not quite a year ago, and we had gotten an estimate 18 months prior to that, almost to the day, 18 months. The cost of my roof with the same roofer, the same roof, same shingles, had gone up 30%.
Holy cow.
From $20,000 to $26,000.
Well, that's a huge increase.
I mean,
that's enormous.
Which is strictly inflation on materials,
Wow.
on shingles, and on labor. But that inflation factor, that falls when that insurance company has to replace that roof, their costs are up 30% in 18 months. And then additionally, when you're looking at your home too, you're often not thinking through how much your home value or home replacement cost has gone up. So maybe it was $200,000 that you had coverage for, at this one point, and now you're at $220,000 and then $240,000 of the replacement cost of that house that you're looking at each year too. So it's not.
So do we need to talk to the county assessor too? And
well, the county assessor is more market value as opposed to replacement cost, and that also is a key confusion point for folks. That you're insuring, you want to insure it. What's it going to cost to replace my home as is today? Not what can I sell it for. That really doesn't impact the replacement cost.
Yeah, fair enough. So let's go on to number 3. If the company's no insurance rates are rising well before their renewal because of the multiple increases that are going to hit them, why aren't they required to send something to the insured notifying them of the increase before their mortgage pays it? Commercial lines let clients know 90 to 120 days in advance of the renewal coming out, just so that they're prepared and have the option to get new quotes well in advance. So unfortunately, since I'm not really well versed in insurance, I'm not quite sure what they're talking about, but I'm assuming
that's okay.
That
I do.
Okay, perfect. Give us an answer there, but one that I might understand.
So the question is, my homeowners policy is coming up for renewal on October 1st. I think the pushback there is why, I'm getting my renewal on September 1st or September 15th, and it's too late for me to sort of shop around.
Okay, yeah.
That on homeowners, and now they're comparing commercial. Now I want to make sure I talk about commercial because I'll push back on those numbers. Those aren't accurate, or they are accurate, but there's a story there. So with the homeowners, we could do that. I mean, that would be a legislative change. The legislature certainly could say, hey, homeowners renewals must be in the hands of homeowners 60 days in advance or something like that. I mean, there's nothing that prevents that. There's nothing that we could do about that. That would be a legislative change to require that. Okay. But I would say, given the environment we're in and given what's happening with pricing, I would tell everyone, no matter when you get your renewal, start shopping around. You've got your policy. You know what your premium you're paying now, and contact an agent. And it's not easy if you've tried to shop around. I mean, there's if you have an independent agent who has a lot of markets, a lot of insurance companies, they can get you multiple prices or multiple options, or you go to your direct writers like your State Farm and Farmers and get some prices. But I would just recommend, doing that 60 days in advance of your renewal and not waiting to get that renewal. And then you're scrambling or as you stated, the mortgage company goes and pays that premium before you have a chance to shop around. But that would be my advice, would be to be more proactive in that scenario, outside of a legislative change but that could be changed by the legislature. Now on the commercial, it was cited that they get their renewals 90 to 120 days in advance. Now, that's not accurate. I think they do get them much more in advance, but what they get is a conditional renewal. That is a key difference. So what they're getting 60 days in advance, I would argue that's more like 60, not 90 to 120, but much more than homeowners. They're getting a conditional renewal, which is basically saying, we're not held to these rates. We're not held to these terms. Here's what we think we're going to do for you. And that does allow you to shop around, and it's not a non-renewal. If you get a non-renewal letter, that's very specific, and you will get that in a certain time frame. You have to get that within. But they're getting conditional renewals. So their actual renewal on a commercial, they're often not getting till maybe 10, maybe 15 days in advance of the renewal on the commercial side.
Okay.
A solid renewal, not a conditional renewal.
Well, this question was interesting to me. Does the state have a plan to create optional insurance plans that agents can sell, like flood or earthquake insurance, regulated by the NCIP, which only covers wind and hail and roof insurance at set rates? A policy by itself, state government regulated to ensure clients can get replacement costs in their roofs for the biggest expense insurance companies are facing. So basically, they wanted to know, can you take, kind of like you'd have a rider for, a mink coat or jewelry or something on you're going to make a roof or like a rider where you can swap those out, because I will say that's probably the biggest problem. And that's what this person mentions. Roofs are ridiculous. Like you just said, I mean, it has gotten to the point where people literally are going, well, I can't afford the roof. And then if they're not going to allow me coverage because the roof isn't up to their standards, then I guess I just don't get insurance. So, I mean, we really are kind of up on up kind of against a wall there on that. Do you see any way to do what they're saying? Maybe just have specific roof only coverage or something like that.
Yeah. Or I think what you're asking is, could you exclude the roof?
Yes,
And
get it someplace else, or I don't know.
Yeah, and so what you're talking about is what I was talking about earlier. That is state government funds or plans.
Okay.
I balk at that. Just I guess
we want to talk about what we think about that.
Well, I'm a Republican. I'm a very strong competitive free market guy, and so the thought that let's establish a government program when there is coverage available. Again, it's back to that I stated earlier, availability versus affordability. That's if we have an availability issue, and we may at some point have that, and then I think that conversation is different. There's nothing that prevents what's being asked. Agents today sell flood insurance and earthquake insurance as riders, as endorsements on their policies, but we don't have anything like that in Oklahoma. There's nothing that prevents that. I wouldn't be an advocate for it unless it was an availability issue.
Okay. All right. Fair enough. Last question. Since insurance companies are now mandating 2 to 3% deductibles, which basically make insured self-insuring their roofs, why aren't the insurance company rates required to reflect the decrease in their exposure?
So I think the insinuation in there, I guess, is because my premium didn't go down and my deductible increased.
Yeah.
It's not reflected in the rates. I would say that's not accurate. It is reflected in the rates. The premiums would have gone up much more if you didn't take a higher deductible. I will tell you that 2 to 3% is an accurate number for commercial properties. That is not for homeowners policies.
Okay.
Homeowners policies, what we see now is 1 to 1.5% deductible. Maybe averaging, we're probably creeping up there on averaging 1.5% deductible. Handful of years ago, we moved away from, and I say the industry moved away from, $1,000 deductible or $500 deductible to a percentage deductible specifically for wind and hail. And you hit on this a minute ago, Jenny, and that is when a storm comes through in Oklahoma, 80% of the claims are roof claims. I mean, we get our convective storms, but 80% of those dollars are for roofs. So that's why we're so focused on roofs and even on our new program. But it is reflected in the rates. Let me give you another stat here with homeowners policies, because somewhere in an article recently, the accusation was made that insurance companies were padding their profits here in Oklahoma because they can't get increased premiums in other states. I would just say that it's hard to pad profits if there's no profits. When I look at
that would be tough.
When I look at our top 10 companies for homeowners in Oklahoma, and that represents 65% of the homes insured, top 10, they had what we call, and I'm going to get in the weeds on you here a little bit, but a pure loss ratio. A pure loss ratio is just premiums brought in versus claims paid out without considering expenses. Okay, so it's
Okay.
simple math equation.
Yeah.
What did a company bring in premiums? What they paid out in claims? The average of our top 10 companies last year was 105%. So for every $100 they brought in,
Yeah.
they paid out 105, and that doesn't include any administrative expenses or
Right.
commissions or marketing or any expenses to that. That's just a pure loss ratio. So I say that to say, I know people are seeing their premiums go up and they're thinking, gosh, these insurance companies are raking me over the coals, but there is no money being made. We're trying to preserve the market. And so these companies are responding by, like you just mentioned, increasing the deductibles, requiring a little bit more onto the homeowner or to the commercial building owner. They're also changing their what we call underwriting guidelines, where they might say, look, we're no longer going to write any house that has asphalt shingles over 15 years old. And that's just an example, but and that's just a company by company. That's not the whole industry, but they're kind of tightening down on those guidelines because they're losing money and they're trying to figure out how to get profitable again.
Well, and I think the problem is, and you talked about it earlier with your roof, you can't control how inflation is going to affect the market. And so you've also got that cost to have to worry about on top of what it is that, you're paying for your insurance every year. So it just seems, I think it can just seem as though there's no end to it. Property taxes continue to go up. This continues to go up. That continues to go up. I think people, and reasonably so, are thinking, at what point does any of this stop? I mean, it can't just go on ad infinitum. I'm running out of, my pockets are empty. I'm running out of bucks. So I don't know how you fix that.
I do think too, Jenny, this is bigger picture with the insurance world. Anyone I've been in the insurance world for 40 years now, which just says I'm old, but there's cycles through the industry of what we would call a hard market and a soft market. And so that is driven by other economic things happening. Can I make up maybe for my losses if I've got some high interest rates or investments elsewhere, that sort of thing? How does that play into it? The reinsurance costs, which is the insurance that insurance companies buy, what is happening in that market? And that has impacted this too, to a much lesser extent than the convective storms and inflation have, but still has been an impact, those increased reinsurance costs. But all that to say, we are right in a hard market right now. And, it will come out of that into and so there will be a lot more aggressive. And so that's where you also then see these underwriting guidelines restrict and companies making sure, gosh, we got too many homes insured in the Oklahoma City area. And so we've got to maybe non-renew some of that business so that if the storm blows through just in Oklahoma City, we're not taking a huge hit. They're looking at that across the state and across the country as well. Their concentration of risk is a concern for companies. So we're in a hard market right now. We'll come out of that. I don't think any time real soon. But again, the fact is, as inflation and costs of things goes up, the insurance costs will go up accordingly as well. I mean, they will track along with that. They don't operate in a vacuum outside of those.
Well, do you have anything kind of as a last comment, a last suggestion for people who are, like me, shaking our fists going, having to.
Yeah, I think just a couple pieces of advice to folks. Number one, shop around and don't wait for your renewal. Shop around, see if there's, and look at bundling your car with your homeowners. There are discounts that are afforded by that. Talk to your agent. Am I taking advantage of every discount that might be available to me? Whether that's on your house or your car, what else might be out there? What else can I do with my house? And along those lines, the Strengthen Oklahoma Homes Act that we will be rolling out come November 1. If you're going to be replacing your roof, take a look at that program. There'll be an application process. And
where can they find that? On the
it's not up yet. It will be on our website.
Okay.
And I think there's some information on there right now, but the application isn't. In fact, we've been in a meeting all day today with the guy who ran the program in Alabama all those years, and he now works for the National Association of Insurance Commissioners, because so many states are in the same boat we are, and they're looking at doing programs. We just happen to be more sort of on that first part of that second wave of those. So Louisiana has a program. Kentucky put a program through this year. Theirs won't take effect till 26. Alabama's the original one. So there's a lot of lessons to be learned from Alabama, who's been doing this for almost 10 years. So that's what we've been doing today. But we can't control the weather. We can help folks strengthen their homes. So when that storm blows through with 90-mile-an-hour winds, maybe there's no damage to their roof. And the impact resistant shingles too, even if that's all you do. Now that won't be part of our grant program, but that would be another piece of advice. When you are replacing your roof, take a look at what's the additional cost for class 4 shingles. It will cost you more on average, a few $1,000s for your roof, maybe, but you'll get a discount on your insurance. Some of those up to 25%. Discount on your wind and hail premium just by changing out having the impact resistant shingles. So that's something else folks should look at to lessen their costs. So I think that's about it. There's a lot of good information on our website that I would direct folks to that explains in detail how rates are developed for homeowners. It also goes into what our laws say. Our laws literally say there is no rate in a competitive market is an excessive rate, period. I cannot declare that an insurance company files a rate with me. I cannot say it's an excessive rate in a competitive market. In a non-competitive market, I can hold a public hearing, and then I can say that rate's excessive. We're going to deny that rate. But with 113 companies, it'd be hard to say that's not a competitive marketplace.
Okay. All right. Well, Commissioner Mulready, thank you so much for taking your time today to chat with us and answer those questions. And I really do believe that will help people kind of at least maybe come to grips with what they're seeing that's coming in the mail on their homeowners insurance.
Yeah. They'll it's a harsh reality, but it is a reality. And like I said, it's math. I would direct them again to oid.ok.gov is our website with a lot of good information, but also make sure folks know if they're having a claim or a problem with a claim, we have a consumer assistance area that they go to our website, the very first page at the bottom, there's a box for filing complaint. We will go to bat for you with your insurance company if you're struggling with a claim, or even if you just have questions. But a lot of people don't know we have that service for folks.
Well, I have to say, I actually used that one time, and it was awesome. I mean, they got right back to me and solved the problem in about 24 hours. So
great.
I have to give you kudos for that, because that was my personal experience. So yes.
Good.
All right. Well, thank you so much for being with us, and take care.
Okay.
And
anytime.
We appreciate you. Thank you so much.
Thanks, Jenny.
All right.
Bye.
All right, so there we go. And I will just say Michael is on, but Michael can, I'm going to pull Michael in, but he will only be on audio. So he can ask you questions in here, but his video is jacked up for some reason. So I'm going to pull him in. And then when you're ready, Michael, you turn your microphone on. Okay.
Yeah, I can hear. I can.
Okay, good. All right. Okay. So other than us laughing independently about our cats liking to be in. All right. So I'm going to kind of turn this over to you, because if you noticed, then I was not terribly informed about this topic, and I feel so embarrassed about it, but I don't feel like I was very informed. So I do want to say one thing, because Amber was on, and she said that the company, when they had a tornado come through Elgin, they raised the rate $67 a month after the claim they had to make, and they were paying $3,800 a year in homeowners insurance before they upped the insurance. So, I mean, that's happened, I think, to all of us, but that is a lot. Kayla, good night. Okay. I'm just going to let you have it, and you talk to me. Talk to us.
Well, I was taking notes. I enjoy talking to Commissioner Mulready. I've done a couple of different podcasts with him concerning this because this affects all consumers. Whether you have renter's insurance, whether you have condo insurance, whether you have homeowner insurance, anytime the price goes up and there's an increase, it affects you. So he does a great job because he does the 30,000 foot view, but we're going to dive into a couple of things because it's very important for consumers. I want you to understand why this is happening. So one of the things that he talked about was inflation, about part of the reason why there was an increase.
Right.
But I want to take a really deep dive into that because it's important for folks to know how we got here. So insurance, first of all, we live in a world that if I want something, I want it 5 seconds ago. So we're very immediate. We're in a culture where it's like, I want it and I want it now.
That's
well,
right.
What people don't understand with insurance is insurance, even though you've got professionals that are doing their best to estimate what the rates are, they look at forecasts, they look at trends, you're not always going to get the forecast right of what you need to be pricing your insurance. So when you go back and look at insurance rates are technically, once you see something happen, it's because once you see a rate increase happen, it's because of things that happened 24 months ago. So insurance is not immediate when it comes to pricing. So the commissioner mentioned COVID. So let's go back to COVID. So we were in a very soft market during COVID. And the interest rates were low, mortgage rates were low. It was a great time to buy a home. And then COVID happened. Well, what happens when we have an event? You go back and you look at historical data and go, okay, when this happened last time, what did we do? We had no historical data for a pandemic of this nature, in this type of economy. So we also have short memories. So during COVID, a majority of the carriers actually froze rates for 6 to 12 months. And I think consumers forget about that because we're looking at the paper in front of us now. So as a goodwill gesture, these companies are like, okay, what do we do to survive? So they actually froze rates. Well, for us, longtime agents were like, uh-oh. That means it's probably going to come back in the form of a rate increase later, but we didn't know what was going to happen during the time that those rates were frozen. So you look about that. So insurance companies actually left some, what I would say, money on the table for, a cycle or two, just because we've never been through a pandemic and they were doing the best they could to survive. Right. Well, then you look at the inflation that hit almost immediately after COVID because the government pumped all kinds of money to keep it afloat. But if you don't understand the economics, when you pump in dollars that are just paper dollars, it creates a whole other storm. So you've got inflation. So we've got, this freezing of rates. So what they had predicted to bring in, they didn't really bring in because they froze the rates for a little bit. So they didn't take what they assumed rate increases were going to be. You've got inflation, but then you've got the just incredible delay of products and services.
Right.
And Jenny, I know you and I talked about this earlier. We had a storm that came through the Norman area, and some people waited 6 to 8 months to get the materials and the products they needed to fix their homes. Yeah. Well, then you've got expedited shipping. Well, then over that time, the costs went up. So the cost of that actual claim went up 20, maybe even 30% of what it would have been originally. So you've got that factored in there. And then you've also got, in Oklahoma, I love to say this, we're number one in so many things, but our number of cattle
the number of what?
Crazy.
The number of
cat
what?
loss storms. And it's catastrophic storms. And to be labeled a catastrophic storm, the damage has to be above like $25 million. So if you go back and look, so you've got everything that happened in 2020 because of COVID, then you have inflation starting. And then in 21, 22, and 23, we set record numbers of catastrophic losses, which means we blew the door open for the number of storms that we had and then the money that was paid out because of those storms. So you add all of those things together, and carriers are coming to the table this year and going, oh my gosh, we don't have enough money in the coffers to pay out what our obligations are. So if we don't get these rates corrected, we won't be able to either stay in business in the state, stay in business in the region, or just stay in business as a whole. And when Commissioner Mulready talked about, he just said a little excerpt about reinsurance. Well, that's another level that's added in there was the cost that the insurance companies have to do business. And one of their big expenses is reinsurance. And they have to meet certain criteria in order to take insurance out on themselves in case they have some really big losses and make sure they're able to pay out to the consumers for their losses. So when we
what
talk
is
about
reinsurance?
So reinsurance is what the big carriers take out to make sure that if they are going to be able to fulfill all of their financial obligations if they have just a tremendous amount of storms. Okay. So insurance companies actually take out insurance to make sure that they can fill their obligations to their policyholders. So you stack those list of things together, and the folks go to the table that do the rates and go, oh my gosh, we are exponentially behind, because you talk about freezing your rate. So you've got a little bit of makeup that we have to make there. You talk about inflation, you see different numbers for inflation, but we're probably looking at an average of 7 or 8%. So putting those two numbers together, let's just say we're looking at 10%. Well, then you do the number of cat losses. So you may be adding another 10, 15, 20% on top of that need to take in rates to just get them stable. But then you look at predicting what's happened the last few years in weather, and considering 3 years in a row across the United States, we have set records. And so it's like, okay, well, if we need to take 30, 40, 50% to get even, what do we have to take to get a little bit ahead of the game so we don't have to continue this? And you sit back and you do the math, and these homeowners, which you and I are both one of them, get a piece of paper and go, wow, my insurance rates have gone up tremendously. Yeah. That's how we got there. And I'm going a little bit because I was making notes when the commissioner was speaking, but one of the things that was touched on was multiple increases per year. So I just want to clarify that. So a homeowner should only see one increase a year. It may not be pleasant because it's going to be drastic, but they should only see one increase a year. So what's happening is the insurance companies can go and file a couple of different rate increases. Well, let's just do it easy. Say you renew in January. Well, if they decide that they need to take rates in March, and then they go back at about half a year later and look and go, oh, we didn't take enough, we need to take another one, and maybe they take one in September, those two rate increases will then, both of those will take effect in January. So you're not seeing multiple during the year. You get it in all one big gift. So that's where, when she was talking about, we see sometimes there's multiple rate increases. Yeah. There may be, but you see it all at one time. So it doesn't make it any more pleasant. If you do a 5 and a 5, you're still going to get 10. Sure. So, another thing that I wanted to touch on was you talked about the mortgage paying the insurance. Well, when the insurance companies send out the notification to the homeowner, it's also sent out to the mortgage company. Some mortgage companies are very efficient, and they get two pieces, or they get 2 bits of information from the insurance company. They'll get a declarations page, and then shortly after that, they will receive an invoice. The mortgage company will. Well, some mortgage companies are extremely efficient, and what happens is when they see the declarations page, they'll pay off that. So that's why you see some companies that pay sometimes on the month in advance, because they get the declarations and go, I know what it's going to be. I'm not going to wait for the invoice. We're just going to issue this check. And then you see some companies that don't pay till maybe 2 weeks or 10 days before the insurance is actually due, is because they wait for the insurance company to issue the invoice.
Or some of them, like mine, wait for the homeowner to get involved instead of getting it from the insurance company. And I had a huge runaround with my mortgage company over that. That's just we were going at cross purposes and nothing was getting done. And they were going to cancel my insurance and then, pay it themselves. So it's not a fun, when you have to switch insurance companies, it's not fun on a lot of different levels. It's really not. And that's one of them.
No, and there's several things that you have to check. You have to make sure that all the accurate documentation is in place, the coverage is the same or better from when you switched. Right. And then you do have to have communication between the carriers, the one that's canceling, the one that's taking the new insurance, and then to make sure that information gets to the mortgage company.
Yeah.
So,
It's a hassle. I mean, just even beside the rates going up, that's one reason why I personally don't like to change, because it's just a giant hassle.
Yes.
So let me ask you this, because I want to make sure we touch on this. So Commissioner Mulready said that he actually said, I'm a Republican and I'm a big free market guy. I think is what he said, right? And he said, so he's all for letting the companies kind of duke it out in the marketplace, which is great. But then here's my concern, and just see if you can help me out with this. So one company says, okay, well, I'm going to raise my rates. Well, then this company says, well, I'm going to raise my rates because I need to be competitive. And this one already did. So this one says, so we just end up, it's like I said in the video with the commissioner. I mean, at some point, you can't continue to keep increasing all these things. You just can't. I mean, your pockets run dry. There's nothing but lint left in there. So he had mentioned a cap on rates, and then he said, he wouldn't do it. And then I said, well, yeah, I can see that if they don't feel like they can make money, then they won't stay here. But then on the other hand, aren't elected officials supposed to be protecting the people that they represent and not the companies? I don't, can you help me with that?
Yes. So that is a double-edged sword, because I do believe if rates continue like this, we are truly going to have to get some sort of legislation in place to help stabilize the rates. Now, he had mentioned things being cyclical. Weather patterns are very cyclical. We're just in a very tough one right now. Eventually the weather will come down. If you go back and you look at 2010, 2002 through 2013, I have clients that literally in a 4-year time span received 3 different roofs. So, and then they go,
wow,
12
that's
years.
almost a roofing.
Yeah, roofers were very happy during that time.
Yeah.
So things are cyclical. So we're just in a really tough place with the weather. But then you add on different layers that we had talked about earlier, and it just makes it really painful right now.
Yeah.
So we do want to be very careful that we don't get into a position like California. California has actually regulated themselves out of a competitive market, because there used to be lots of carriers in California, and the government went and put certain regulations. And it made it where if they did have big catastrophic losses, they could not go back and recoup some of that rate. And so after you take several losses in a row, it makes it where it's not profitable at all, and you'll never catch up to be in that state. So it just makes good business sense to pull out. Well, that stinks, because it makes a hardship on the consumer, because if you have 10 different insurance companies and they're all competing for business, well, if you go down to 2, then that makes the competition not really a competition, because you have choice A and B. And what's hard, I do want to clarify some things. So one of the things that I am going to answer your question, but I'm going to put in something in the middle. So one of the things that the commissioner stated is we currently have 113 insurance carriers that are providing insurance in Oklahoma that have coverage on the books. That is true. But in this current market, there are a lot of things that have changed with the carriers. And even though we have 113 carriers that are actively have business in the state, it doesn't mean that they are actively pursuing business right now. So our market is a little bit tougher for the fact that we have a handful of companies that have stopped writing business in the state, put what's called a moratorium, because they're trying to stop the bleeding and just stabilize the rates in Oklahoma. They haven't chosen to pull out, but they have stopped issuing new business to try to get stable. And then you have a majority of your carriers that have put some really tight underwriting restrictions, which means they are trying to find the pockets of business that are profitable so they can stay in this state and not have to pull out or continue to do these really big rate increases. So what you talked about earlier with your homeowners insurance, and I smiled, not because I was happy for that, because I'm going through the same thing. I actually have an insurance company, and it just happens to be openly, and they are actually non-renewing our homeowners insurance. And the reason that they're non-renewing is the area that I live in, I'm rural like you, is no longer deemed profitable for business because of the risk that it portrays. So earlier you had talked about flood insurance. Well, the flood insurance, about every 10 years, they go back and they do a remapping because of weather and the environment, the earth changes. So your flood zones change. Well, recently, due to the extreme dry weather in Oklahoma for the last few years, and then just the different things that have happened, they've gone back and updated the brush fire risk. Well, I live east of I-35 in a rural community, not a lot of homes, not a lot of traffic, and there is a lot of trees, there is a lot of brush, and it's grown up. It's beautiful. But in the insurance eyes, that does prevent a much bigger risk than when they decided to take me on a few years ago. Yeah. So you've got your
and there were some bad wildfires in that area last year.
Yes, there were.
Yeah.
And it came very close to our house. I will tell you that I was thankful on that day that I had insurance because I thought, oh gosh, I may be constructing a new home soon. So you do want to have insurance for those reasons, but some of the companies have gone through and just put really tight restrictions. Well, the tight restrictions are great because it helps them to become more profitable and stable. However, when you have lots of restrictions, that really narrows the gamut of homeowners insurance or homeowners that they want to take on at that time. So even though you have a lot of companies writing business, the pool of people that they're looking for may not be a very large pool of people. So you may go out and get quotes with 20 different companies and maybe 5 will only return rates. So there's a balance that we have to take there because we want to have a free market. We want to have companies and we want them to come in and be competitive. But at the same time, as a consumer, I know my pocketbook cannot sustain a 50% rate increase every single year. So I do not have the answer, but I know that eventually we'll probably have to work with legislature that if this continues, we are going to have to put some protocols in place where if you want to do business in this state, there's going to be certain restrictions that are going to eventually be applied to there in regards to regulations and maybe what companies can do year after year.
So do you think caps are just no caps, or do you think that may be where we have to go, just at least a cap on one? I don't know.
So I'm not really a big fan of caps because I see what's going on in the background, but at the same time, I would not put like a 7% cap like California. That's crazy. But we may have to come back and say, you cannot take more than 50% 2 years in a row or something like that.
Okay.
You don't want it to be super restrictive, but enough where, hey, come on now, people have to be able to afford this. But at the same time, if there are lots of regulations that are put on there, then it's going to happen what's happened in California. The carriers are going to go, we appreciated our time here, but it's not working out anymore.
No, and I get that. But I do think, like, for example, we talked about, I don't know what to call it because obviously I don't know what I'm talking about, a rider for your roof, because I do know that roof costs are the 9 times out of 10 the biggest thing ever. And at this point in our insurance, the way our home is insured, we're going to end up paying something like 60% of our roof out of our pocket.
So I will tell you that Commissioner Mulready spoke accurately on the deductibles. The average deductible in Oklahoma is 1%. However, averages are based on past trends. What we're seeing now, and especially over the last 6 months, there have been several companies that have been pushing 2% wind and hail deductibles. There is a company that has changed to a mandatory 3%. And then there's a couple of companies that have like a minimum of 5,000. And then there's a couple of companies that have a 5% wind and hail if you are considered to be in a very high loss ratio area. So the trend is that we are going to be, as consumers, paying higher deductibles. And on the average home in Oklahoma, once you hit about the 2.5% or 3%, you're paying for a majority of your roof. So that's where the insurance companies are trying to maneuver and go, okay, how do we help control these rates but still offer coverage? So one of the things that they're doing is, the biggest movement that you're going to get in rates and for the amount of monies that are paid out in claims is having the consumer take on more responsibility, which means a higher deductible in those high loss areas. So in Oklahoma, what you're going to see is the wind and hail deductible changing, because that's going to go over to consumers. So as a consumer, we're going to have more of the financial burden when it comes to wind and hail loss claims.
How do we fix that? I mean, because legitimately with because Commissioner Mulready was talking about inflation, so were you. As the costs for roofing materials continues to go up, while the deductibles are also going up, how many people, honestly, in Oklahoma, how many people have the ability to just pop 35 or 40 grand out of their back pocket to fix a roof?
And I don't think a majority of people can. So there's a couple of things that are going to have to happen.
So then at that point, my question is, why even have insurance then? If you're going to end, now you're having to put out, I think we're up to $3,200 a year, I think, on our homeowners insurance. So we're paying that. And then we are going to have our roof replaced here within probably another year or 2 years. And how do you do that?
Well, there's going to have to be a fundamental change in the mindset of consumers on a couple of different things. And I'm going to go back to 2010. And in 2010, the standard deductible in Oklahoma for wind and hail was $1,000. Well, we had those storms in 2010, and then we had those storms in 2012, then we had those massive storms in 2013. And one of the things that pretty much all insurance providers did was they changed to a standard 1% wind and hail. And I will tell you, the first few months after it came out, I thought all the insurance agents were going to have a stroke, because it was just such a fundamental change. Yeah. And then the clients are like, what? Instead of having to pay, let's say you had a $300,000 home, for easy numbers. Instead of having to pay $1,000, you now have to pay $3,000. So that was a huge change. Yeah. Well, once it got to be the norm, it was a fundamental mindset, and people got prepared to have that outlaying of cash if they had to have their roof replaced. Well, we've expedited that and then made it exponential. So one, consumers are truly going to have to start being a better steward of their funds and trying to set up maybe even emergency accounts so they can take care of things that happen at their home. But at the same time, realize that your insurance is not a maintenance policy. So you want to use your insurance for the large catastrophic losses, like your roof. If you maybe have a water leak and it's $2,500, $3,000, yeah. I know that is awful, and it dings the pocketbook, and it changes the course of what you have planned for that month. But it's probably going to be in your best interest to pay that out of pocket, because you want to save not only the insurance rates, but save to make sure that you are using your insurance for the large catastrophic losses, so we're not continuing to perpetuate this problem with the rates.
Yeah. Well, I look at people like my dad who are on a fixed income, and he's just like so many people. They come to the end of the month and that's the end of what they have. I don't know how those people are going to be able to do that. So
and it is very hard, because the increases in the cost for things are going up substantially higher and quicker than incomes. So it does. People are having to make choices. We have folks that call in every day that you get off that conversation and you are just drained and exhausted, because you realize the financial stress and burden that these tremendous rate increases, you've got your taxes, you've got your insurance, you have the cost of gas, all of this is building up, and then you get your insurance and it's like, okay, I'm done. So these conversations are very hard with the consumer. So if you see an insurance agent out there, give them a hug, because our days are long and hard.
Okay, so let me ask you this, and let's go back just a second. So Commissioner Mulready talked about a bill that was in the legislature, and I'm going to go ahead and pull it up. I don't know that you're going to be able to see it super well.
And so folks can write that down, Jenny. If you Google it, it's HB 3089. So it's House Bill 3089. It's called Strengthen Homes Act.
Yeah. So here's the act. Let me see if I can pull it, make it just a little bigger. That might help a little bit. So then at least you can see the bill number 3089. Well, I looked at this bill and I was, well, so I'm not a fan of the legislature usually in general, and I'm certainly not a fan of the bills that they write kind of in general. And this one was another one of those that I was very frustrated with because it doesn't really look at all. I have no idea what any of this is doing. And I did ask Commissioner Mulready specifically, and you guys heard me do it. Is this taxpayer, are these taxpayer funds for these grants that he was talking about? And he said, no, they're not. And I don't know how he answered that question, but it led me to believe that it was not. But then when you read the actual bill, it specifically says in here that federal funds, that's the very first thing. It said federal funds and other funds, but it doesn't say what those other funds are. But the primary thing
if you go, Jenny, real quick, if you'll go to page 2, okay. It's under section 2B.
Okay.
So there's, okay, so
2B, there it is right here.
Yes.
Implementation of the SOH program is subject to the receipt of federal grants or funds or from other sources of grants or funds. The department shall use its best efforts to obtain grants or funds from the federal government. But those are taxpayer funds. So you can't, if you're going to do your best to get them from the federal government, those are taxpayer funds or other funding sources to supplement financial resources of the SOH program that may be provided by the state taxpayer funds. Just saying.
So I think what they're getting at here is it's not going to be specifically allocated funds, so it's going to be specific in the budget. However, in grants and stuff, if they are applying from the federal government and the state, it ultimately is taxpayer dollars.
Yeah. So then again, I feel like, I mean, this is just me personally as a Republican, as a conservative. I think private organizations should be doing that kind of thing. Go out and raise funds to help people who are on fixed incomes, elderly, whatever that might be, to help them get new roofs. But to have to take funds from taxpayers who are already struggling with this, we just talked about this, and then redistribute those funds to other people, I don't see that. I don't see that as being a good steward of funds if you're a Republican.
Well, Commissioner Mulready did talk about one thing, excuse me, and you brought it up on the flood program. So there is a company that we've talked to them a couple of times, and they've talked to different agents across the state. Hold on, excuse me 1 second.
Sure.
That they are in states not in Oklahoma, but they are actually coming out with a wind and hail product. And what the wind and hail product is it's going to be a supplemental policy. Okay. So we don't have the pricing for it yet, and I'm sure the pricing will be way different in Oklahoma than compared to other states. But what it is, it's specifically for wind and hail. So what that would allow consumers to do is take a higher wind and hail deductible on their home policy and then take out the supplemental policy.
That's actually not a bad idea.
Well, and in theory, this is great. So if you can change your wind and hail deductible on your homeowner's insurance to like 5% and save, $1,000, $1,200, $1,500, and then buy a supplemental policy for $400 or $500, you've made up ground there. You're actually saving money. Mm-hmm. So the idea, the next big meeting with this carrier is in October. And so hopefully we'll see this product rolling out. And I do want to make the consumers very aware of this, because this is how things happen in the insurance world. When a carrier comes to a state, they've done business in other states and they know how the other states have gone. But Oklahoma, we're our own unique product. There's just so many things. Well, considering that this insurance is just for one, wind and hail in Oklahoma, tornado is classified as a windstorm. So wind, hail, or tornado. If this product is meant specifically for this, hopefully the pricing will be more on target. But what happens a lot of times when a new carrier or when a carrier comes to Oklahoma, they have really good pricing. And then they go through a couple of cycles of storms and go,
Yeah.
we're a little under the market. So we call that a honeymoon phase. So you get your honeymoon pricing and then you get the real marriage pricing later. So hopefully they'll be pretty accurately priced considering it is a product just for this. But Oklahoma is just such a unique beast that my gut tells me is hopefully the product will get implemented. And then after a couple of years, we may see some price adjustments because they've really got a good share of the market, got a good feel of what the cost of business is going to be here. So there's probably going to be some adjustments. But I think in theory, if what they're proposing can be brought to fruition, I think it'll be really great for consumers. And then the other thing is once somebody jumps, there are other companies going, well, if they can make it work, I wonder if we can develop sort of product like this.
Right.
And
so competition instills competition.
It is. And one more thing that I want to address. I'm very vocal in my industry. I love my industry, although right now I feel it's trying to kill myself and the consumer, but I do love my industry. And so I sit on a couple of national boards. And one of the things that is a very hot topic with insurance companies right now, especially in the state of Oklahoma, is doing some sort of a la carte policy. Now, this will take a couple of years to come into play. But one of the things that is on the table is you select your amount of coverage. So say your roof, that an average roof is in Oklahoma is going to cost you anywhere between $30,000 and $40,000. Well, if you want to select a flat $25,000 of roof coverage, then that's what you can select with that carrier. So that regardless of when you replace your roof, you're going to have a set deductible, and then your insurance company is going to pay $25,000, and anything over that amount, you're going to be responsible for. There are another couple of items on the table where it's called a buyback program. But say your insurance is $3,000 a year, but if you want to select and pay a little bit higher a premium, then they'll buy back some of the wind and hail deductibles. So there are a couple of things that they're talking about. But the other thing that we have to be cognizant of in Oklahoma is the pricing for roofs are not always the same because, and I'm not a roofing expert, I just know enough to be dangerous, but what we have to deal with is, roofs are a petroleum product. So at different times in the year, the cost of roofs are different. Yeah. Well, if you get hit in the middle of storm season and you need a new roof, your roof is going to be more expensive than if you had to put it on in January. So there's other things that we have to balance. So when you talk about the a la carte policy, at some point in the year, your roof may be $30,000, but at a different time of the year, it may be $35,000, depending on the product demand and the cost. So there are a couple of things that will have to be figured out. And with any new product, you get it implemented and then go, looking back, there's some things we can tweak so that it may not stay the same. But there are some good things that are coming on the horizon. We just have to get through this really low valley right now.
Yeah. Okay. We're at 1:15.
Oh, goodness.
Goes by fast. What would you, I know that we had talked about, you want to show people let me pull this page up.
Are you doing the Liga scan?
Yeah, I was going to pull that up.
I want consumers to be very cognizant of what is going on in the marketplace with insurance in regards to what is happening on the legislation. So I wanted to bring up this website. This website is fabulous. At the beginning of session, what I do is I go in and I do a search. It's on the left-hand side where you can search bills that you want to keep track of. So I just put in the broad topic of insurance. Now, this will pull anything from healthcare to anything that has to do with insurance, but you can go in and weed out some of the bills. So what Commissioner Mulready was talking about, the House Bill 3089, I tracked this all the way through the session. So if you want to know what's going on insurance, on what things are changing, again, this will consume everything insurance, but you can narrow it down once you look at the scope of the bill, and you can track what's going on in the auto industry, in the healthcare industry, in the homeowners industry, in regards of what legislation is for that type of insurance.
Okay. So, and that is, unfortunately, it doesn't really show up very well, but it's legiscan.com is what this particular, but it's just really super easy to find it. If you just go, I say Liga, whatever it is, scan, .com and look it up. And it is a very easy, like when Kayla was just talking, I typed in insurance and it says create search alert. So, and you can do that and register for free. So it's a very easy, I use it quite a bit. So yes. And then there was another one that you wanted to bring into, and I don't know why I keep getting out of these things. I guess because I just like going back and forth. But this was the other one that you wanted us to talk about here. So I'm pulling that one in.
Yes, the Department of Insurance, their website is very user-friendly, and it has a wealth of information. You can go and you can look up the carrier. They do a annual audit, so it lists all the companies that are doing business in the state. You can see the health of that insurance company. So the healthier the insurance company, doesn't always migrate into the rates that they will be taking. If they're a very healthy insurance company, they may have a lot bigger percentage of business in Oklahoma. So their rates will vary from other ones that have a smaller percent of business. But you can go and look at the health of the insurance companies. You can also look at all the things that the Department of Insurance is doing in regards to the insurance industry, what they're doing. They put on seminars. There's all kinds of things that you can look at and keep track of on this website.
Okay. All right. So before we get out of here, is there anything else that you feel like we need to touch on that we haven't thought about? I mean, anything. Can you think of anything?
Yes, it is very important to have a good relationship with your insurance agent. Talk to them about the rates. Let them know, hey, this is really a burden on me. What can we do to help mitigate some of these rates? I do not get to speak with all of my clients every year. However, we make a big attempt to, when we send out the renewals, have communication with them. There's lots of information that we put in the renewal email because things could change. If there are changes at your home, there may be some coverages that you no longer need. There may be coverages that you need to add. There may be new discounts that are available. You want to make sure that they are shopping because, especially being with an independent agency, we want to shop our clients with as many carriers as possible to make sure that we are getting them the most competitive rates. And then you're really going to have a hard conversation of, what's going to be my threshold of what I can consume as a financial burden. The biggest movement you're going to have in rates is your deductible. So you just want to be very cognizant if you call in and say, I need something done with your rates, and your insurance agent comes back and goes, well, I can save you $800. You need to ask what has been changed to save you that $800, because even though the $800 may feel good right now, if you're out an additional $5,000 down the road, have you made any progress? So you just want to have a good relationship, and the conversations sometimes may be hard, but you want to have those conversations because you want to be a good steward of your home and a good steward of your funds. If you're going to have a big deductible, you want to make sure that you can get that taken care of.
If you, just as one last thing, and I don't know if you even know, so I'm just flinging this out of the blue, but for those people that are just really struggling, that are on fixed incomes, that have had, severe setbacks, they're just not able to help themselves at this point in this area. Do you know of any place that these people can go for assistance?
So not that is specific insurance related.
Okay.
I know there's there's charities around Oklahoma City that will help with needs based, sometimes with clothing, with food. There are some that help with rent and utilities, but I don't know of anything specific with insurance.
Okay.
So what I would say is, if it's the insurance becomes such a tremendous financial burden, probably the best thing to do is look at adjusting your deductible.
Okay.
Because you want to be able to stay in your home, be able to place food on the table. You want to be able to maintain right now, but you
Yeah.
also need to get a plan in place that you're going to have a little bit higher deductible, but I would much rather a consumer have a higher deductible than no coverage at all. Because
No.
if something did happen and they weren't able to put anything back together, that would be so devastating. At least with just a little bit higher deductible, there'd be hopefully ways that we could help folks get the funds to pay the deductible, but they would still have coverage in those large catastrophic losses.
Well, and that honestly, that is a really good point. Even if your funds are just, minuscule, there might be a better way to come up with $25,000 or $30,000 rather than, 87
Everything.
or 125. So there is something to be said for that. And I think that does make some rational sense in terms of what you would do with your pocketbook to protect your pocketbook. So, well, Kayla, thank you so much for coming on with us today. So helpful. We had a nice audience this morning. I think people are very concerned about this. I do think the ability for people to go back and, listen to what you and Commissioner Mulready have both said, I think is going to be extremely helpful to people who are in trouble right now. But I sure do hope we can get something like you were talking about with the, more a la carte, if you will, type coverage, because boy, for any of us just plunking down, 30, 35 grand to get a roof over our heads is just tough. You're talking about like second mortgage territory there. So, all right. Well, thank you so much, Kayla. I sure do appreciate you being with us. And thank you again for your time. You've just been a blessing, and you've been so knowledgeable, and so it's just been so great. So thank you so much for doing that. So appreciate you.
Thanks for inviting me on. And again, just make sure you have a great relationship with your agents so you can talk through this hard market.
Great. Thank you so much. And I hope we talk again soon.
All right. Thank you.
Thank you. All right. Well, I'm sorry, everybody. Michael was just not able to get on this morning. He's got some kind of a computer glitch going on that I just cannot quite figure out. I'm sure he can't quite figure it out either. So, but he will be on hopefully again next week. And next week, by the way, we have another great show. My old editor from the Federalist, Joy Pullman, has written a book, and it's called False Flag: Why Queer Politics Mean the End of America. And I think it's going to be a great podcast. She's going to talk about the book, and we're going to have an opportunity to ask her some questions about why she wrote the book and that kind of thing. So again, make sure you tune in for that. And then on Friday, we're going to have our Rope Report replay with Reed Downey. And we had a great conversation with him several months ago, where he went over the Oklahoma report card with us, and didn't always have great news. And I think that's something that we really need to talk about, especially when the legislature continues to appropriate funds to public education, when we really are not seeing them doing what they're supposed to be doing and tasked to be doing, which is educating children. So that's then we will have Julianne come back. She's been absent for the summer, as it's just, it's what happens. Summers are for families. So she's going to be coming back with us. So just hang in there with us. If you haven't subscribed to our newsletter, please go to rope2.org. It's right there at the bottom of your screen. Sign up for our newsletter. And when you do, it'll come out on Monday. I try to get it out first thing on Monday morning, get it out Monday morning, and then it'll have information on what's coming up on our podcast and some shorts that I've produced from the previous week's podcast. So you do want to stay tuned. You do want to sign up for that so that you can have access to that information. So thank you again for joining us today. We're so sorry we missed Michael. We'll have him back again next week for sure. And thanks for tuning in. And thanks again to Kayla. And thanks again to Commissioner Mulready for their time today. We appreciate you tuning in, and we'll see you again next Wednesday. Thanks.